Apple and Nvidia managed to put together huge rallies today. And in the process, it took the S&P 500 up 0.9%. It took the NASDAQ 100 up about 1.6%. But lagging significantly in that rally was the Russell 2000, which was only up about 0.2%. So it wasn't a huge day for a lot of your stocks. In fact, you had about 3 stocks going down for every 2 that were going up. That means a significant amount of the stocks out there were not participating in the market today. And you could see that reflected in the sectors. You only had 3 sectors rallying today, while 8 of them were actually going down. Now, what 3 sectors would that be? It's the ones that have the highest concentration of mega cap stocks. That's tech, obviously. That was the biggest one. It was up 2.7%. Then you had communications up about 0.5%, and then discretionary up 0.1%. Everything else was red. Communications being Meta, Google, Netflix, your discretionary being Amazon. Those were all the drivers of the market. And it's actually pretty rare these days to see Amazon and Nvidia work side by side to drive the market higher. Typically, of late, it's been Nvidia rallying, Apple declining, or Apple rallying and Nvidia declining. They don't seem to work well together too much because I think it's because of how much it takes to rally these. If one's working well, the other usually isn't. But in this case today, they were both rallying. Then you throw in Microsoft in the mix. You have over $10 trillion in market cap driving this market higher. So the big question is this just like a knee-jerk reaction? Or are we looking at more of a dead cat bounce here that sends us right back to the downside? Are we going to the all-time highs, or are we going substantially lower? You have huge news events coming out tomorrow with the earnings from Meta. You also have earnings coming out from Tesla and from Microsoft. But before that, you have the FOMC coming out. So the Federal Open Market Committee will be reporting at 2 p.m., followed by an unnecessary presser at 2:30 p.m., where Jerome Powell likes to yap away for a while. So that's going to create volatility. So tomorrow is going to be a pretty heavy event-filled day. And so there's the opportunity for the market to take some wild direction. So even if the market responds negatively to the FOMC statement, the earnings comes out, it could reverse all of that in the after hours and vice versa. So let's look at Nvidia here. This is the chart that I posted yesterday, and there's a little bit that's changed that I want to outline here for you. One trend line that I did not draw because there was really just 2 points where it was connected. And so I didn't really feel like that was a strong trend line for us to consider. But guess what it did? It emerged today as the launching point for Nvidia off of this rising trend line. It goes all the way back to the April lows of last year. So it started right here in April. It got retested again in July. And then yesterday and again today, it got tested, broke below the 200-day moving average, went right back above it. Now, you also have a gap, a huge gap from yesterday. And what you'll notice, if I zoom in just enough, you can see where price is starting to sneak inside of that gap. So there's a lot of momentum right now going in the favor of Nvidia. In fact, you could even say it's not quite textbook, but those are like tweezer bottoms on the Nvidia stock. Those tend to be a little bit more on the bullish side. So you're in the gap, you got the tweezer bottoms. However, even though you got tons of volume coming in today, I'm not a huge fan of this bounce. Now, I did get it short a little bit on Monday, and I'm not bleeding too bad on it. I think I'm down about 1.1%. So it's not anything that I'm like freaked out about. However, I'm still not totally convinced that this isn't just a dead cat bounce. Now, if it goes above the highs from Friday on the S&P 500, so be it. I'll be out of that trade and I'll move on. However, I need to see on SPY, once it fills this gap, what does it intend to do from there? Will it fill the gap and then come right back down, or are we just going to blow through it and make new all-time highs? If it is, I'm not going to stay short, that's for sure. So, and I'm not like a perma bear where I'm always short, that far from it. I actually have, that's like the first time I've taken even on a short trade so far this year. Yes, we're only a few weeks into this new year, but nonetheless, I don't get short that often. This was more of a test in the waters kind of a thing. If it was to continue to the downside, I'll probably add more short exposure. But right now, I haven't gotten to that point to where I feel like we've seen definitively this market wants to reverse the gains from today. So going forward, I don't necessarily think that you want to go piling into the market here. Remember, only 3 out of 11 sectors traded to the upside today, and they were all mega cap based. And so when you get such a high concentration of power going into these stocks, they're going to pull the indices up regardless of whether or not a majority of stocks are participating in the rally. For the most part, I would say the last time that I checked from earlier today, it was like 350 stocks were selling off on the S&P 500 versus 150 that were advancing. So that's a significant discrepancy right there. So there's a lot of divergences to keep an eye on, and that we don't want to necessarily assume that, okay, what happened on Monday is in the rear view, everything's back to normal. No, we can't do that. You have to be a little bit more concerned with this market going forward. It could still make new all-time highs, but once that gap fills here on SPY, are we going to just completely reverse to the downside? Or are we going to gap tomorrow to the downside? Oftentimes, we'll see a lot of bulls get pulled in, and today there was a lot of bulls pulled into this rally only for it to reverse to the downside. So be careful out there. There's a lot of news events coming up in the next couple of days. You want to be able to remain flexible. If you enjoyed this video, I would encourage you to like and subscribe and let me know down in the comments, what was your impression about today's rally? Do you think that this is something that we're going to definitely see continuation on, that we're going right back up to the all-time highs, or do you think it reverses here? I'm kind of curious to know what you guys think, and we can discuss it together in the comments. Thank you guys, and God bless.